All right, microphone, present. Invite, leave studio. Son of a bitch. I've done this before and it has worked. Oh, I've got some comments. We're live, no sound, no audio. Oh, you can hear me now. That did it. I didn't even do anything. Isn't that strange? Well, okay. Sorry about the technical glitches there to get started. It looks like the sound is working now. At least on. Yeah. Okay. We're live. So cool. Great. Thank you, everybody, for joining me. What I wanted to do tonight, earlier today, I had posted a tweet that said, here's some homework to do. Take a look at these stocks. These are the year-to-date winners and losers in the S&P 500. It wasn't my idea to, say that anything is actionable here, but simply to notice what's leading so far and what's, where's the strength and where's the weakness. So let's take a look at these together. And that was what I want to do. Constellation Energy is the number one stock year to date in the S&P 500, currently up 41.2%. Where was this stock at the beginning of the year? It had just been undergoing a little bit of consolidation in a major uptrend. And then we saw buyers right from the start. It closed one day below the year-to-date anchored VWAP, and it's been up and away since then. We saw some news over here last week. So clearly, this is a leading stock, which continues to lead. It's getting quite extended, but it's been quite extended for a while here. The question is it a low risk, high probability trade right here, right now? And my answer to that is I don't think so. We want to see that, just last week we saw a low of 280 and then it rallied to 320. So 40 points. That's a hell of a move. That's 15% in there. I think you need to let it settle down a little bit. Let's take a look. We'll go through these pretty quickly and I'll point out some educational things as I see them. Now, Walgreen Boots is clearly a stock in a major downtrend, and stocks in major downtrends are not immune to getting some nice rallies. But what typically happens to those rallies when we're below a declining 200-day moving average, or even while we're above a declining 200-day moving average, is that they typically fail. So if you're involved in Walgreen Boots, I wouldn't look at this as a turnaround. I look at it as, hey, the stock just rallied past the 200-day moving average and right up to last year's anchor, which is also the anchor off of this high right here. So I would think that if you're involved in Walgreens Boots, you want to look to, this is another bounce in a long-term downtrend. And the old phrase that I love to point out for stocks like this is if they don't scare you out, they will typically wear you out. And some people might say, well, it broke the trend line. And breaking a trend line doesn't mean the stock is reversed. It means the rate of descent has slowed down. And sure, that's encouraging. And maybe we can see this thing rebuild. But I look at it and say, with a declining 200-day moving average, rallies are less likely to follow through. So we look at where was this stock 200 days ago? Let's look at the daily chart. This here is where we were 200 days ago. So what that tells me is that with the stock, right now at $12.52, let's just say below this level, in order for that 200-day moving average to begin rising, we need to get rid of it. It either has to be above or we have to average all this data out. So this was 200 days ago. This was 50 days ago, and this was 20 days ago. So each day that line moves forward one day. So in other words, guilty till proven innocent with a declining 200-day moving average right up against last year's anchor. If you're long in here, lock in your gains, raise your stops dramatically. I think it's highly likely that this stock in the next 3 months or so will be back, and probably sooner, down towards that $10 level. So be careful with one like that. It's in a downtrend, and this is a bounce in a downtrend. Now, TPL, Texas Land Trust. Let's see, is this a dividend paying one? Let's take a look here. Not much of a dividend, 1.6%. Looking at this monthly chart, though, it's been in a massive uptrend. And the weekly time frame, you can see we pulled right back down to the 20-week or 100-day moving average. We also got back, or we didn't, I'm sorry. It looked like we might have. There's the anchor from the election. So that is likely, I think. You have to look at the stock and say, where has it come from? It just came from 1100 in the last couple of weeks, uh, basically since the beginning of the year, to 1400. So about a 28% rally. So where has it come from, and where does it have the potential to go before it might encounter a source of supply that becomes resistance? Notice you'll never hear me say, hey, there's resistance at the anchor from the election or something like that. I'm going to say there's the potential for supply that might be strong enough to see the stock do this. So if you're looking at TPL and looking for a buy, I think you're much better off not chasing it after this 30% move. Instead, waiting for a pullback, let that 20-day moving average kind of catch up to it, and that 50-day moving average to go like this. And then maybe here in a couple weeks, TPL can really continue its move to the upside. Micron Technology, is this in an uptrend? Is it in a downtrend? To me, it's just in a range. I don't see, it's a bounce from the bottom of the range up towards the top of the range with another declining 200-day moving average. To me, if you trade Micron, great. If you're looking for a big turnaround, I don't think it's likely. We're right up against the anchor from last year's high. You can see that general area has been a place of resistance. And with that declining 200-day moving average, and this being where we were 200 days ago right here, it's likely that maybe if we rally into here, and then even if we break, the most bearish thing I think is if we were to rally up to here, break out past this level, and then for people who chase it from a move of 85 up to 115 and buy the breakout up there, they're likely to get stuffed. And then this is going to take a lot more time to really see that it can sustain a longer term uptrend, at least for now. Things can change. They always do. Vistra. Now, these guys, their large plant caught on fire the other day, and I was looking at the stock thinking, this is why I don't trade news. If you trade news, you would have thought this stock would be down 10, 15% based on their big battery plant burning, but it's not. So you look at it and say, it's in an uptrend. It's innocent till proven guilty. It's making a nice pattern in here. It's stair-stepping higher. Prior resistance holding a support. Is this prior resistance going to hold a support in here as well? It's in a nice uptrend. This is the type of stock that should be up year to date because it's in a big uptrend, similar to GEV. And this one had broken out of this range over here pretty much on the second day of trading this year. So this is the blue. This is on the right, by the way. We have a 30-minute time frame. On the left is a daily time frame. And here you can see that buyers have been in control. And people who try to short these stocks typically get exactly what they deserve. They deserve to lose their money for fighting the trend. Why would you expect to make money when you're shorting a stock at all times highs? It doesn't make sense. So it's innocent till proven guilty. TRGP would be number 7 on this list. It's up 20.85% year to date. Longer term, it's in this beautiful uptrend on the weekly time frame. We've got a 20-week above the 31-week, above the 42-week moving average. It's in a beautiful uptrend. It's pulled back. The buyers are back in control. The question is, again, where has it come from? It doesn't mean it can't continue to move higher, but in the last 4 weeks, we've gone from 172 to 215. You're clearly not early to this. And a lot of times stocks, when they break out, they start to see some consolidation or pullback. So I would say, don't let FOMO get the best of you in these names. This stock started out the year strong on a gap. We've been holding this is the, let's get rid of that pink one. This blue year-to-date anchored VWAP. That has held, and buyers have been defending it. Now we're pretty far extended. Look how far extended we are from the year-to-date anchor. Look at how far extended we are from the 5-day moving average. The stock has a beautiful pattern here of higher highs and higher lows, so it remains innocent until proven guilty. But if you think that you can make big money buying a stock after it's just rallied this much, maybe you can, but typically you can't. Know where your risk is, but don't let FOMO get the best of you and start chasing this stock up in here. It seems highly likely to me that in the next few weeks, maybe even starting this week, that we're going to start to see some kind of consolidation. And by the way, Target Energy Resources, I believe, is an energy name, and energy has been strong. So maybe we see something like this, and it pulls back all the way to the year-to-date anchor here. Then we'll put an anchor off of that peak, and then it might stay underneath that. And in a couple weeks, maybe after a pullback, it will be in a low risk, high probability setup for a swing trade once again. Incidentally, XLE has had this just massive run here recently, holding that rising 5-day moving average beautifully. And I saw Trump today said, "Drill, baby, drill." And when the television was on, I turned to my wife and said, she has no idea what energy stocks have been doing because I don't talk to her about that. But I said, "What do you think is going to happen to the price of oil and oil stocks tomorrow?" She goes, "Well, it's probably a case of buy the rumor, sell the news." And she didn't even know that this has been basically buy the rumor in here. If you're involved in these energy names and you're getting bullish because of what Trump said today, the market discounts the past and anticipates the future. Energy names are likely to sell off. Not necessarily they're going to get crushed, but a pullback to the 5-day moving average, a pullback to the anchor from the election. That's this black line. That certainly, is well within reason. And then perhaps it catches the anchor from the year to date and the election right in here. So maybe that's what we'll see. And then energy can recover. I've been skeptical about energy, but it's clearly been moving higher. We had as I was pointing out, we had the potential that this was a longer term top and that it was going to make a lower high in here and then break down. Instead, the buyers took control. So, that's why you don't short on the way up. You wait for them to roll over or you just avoid it. So anyways, the point about these energy names is be very careful with them. Don't become bullish because of what Trump said today. The market has been anticipating that. The market knows that he was going to say this stuff. Clack, it's just a mess. I look at this and say, does this stock have the type of personality that I want to trade? I look at the ranges in here and it just looks so damn erratic, looks so bullish right here. And then bam, just kick this shit out of people. Same thing right here on the way up. It gapped down, tried to stabilize, and then another punishing sell-off. And then people got excited, a punishing sell-off. Is that going to happen here again? I'm not here to predict that sort of thing. Instead, I look at it and say the personality of the stock certainly doesn't suit me. I have no interest in trading a name like that. We're going to look at two more. We'll get through number 10, and then we'll go to the 10 worst losers, and then we'll see where we are time-wise. But hopefully this is helpful. And let's see, Clack. So Applied Material, another semiconductor. So the semiconductors, you've got to look at this, and we've seen Micron, we've seen Clack, now AMAT. So 3 stocks within the top 10 are semiconductor stocks. Notice that NVIDIA isn't one of them. NVIDIA is, it's down a little bit for the year. It's not down a lot, but it actually looks like it's up a little bit. So this is where we ended last year right here. So we're slightly higher. That bar right there was the close for 2025 and here we are slightly higher for the year. So anyways, semiconductors are bouncing. They're stuck within this range. So let's go back and look at Applied Materials and see if this wasn't any different. And it looks almost, it doesn't look identical, but it sure has the same personality as Clack. If you look at Clack and then you look at AMAT, it's got these, this punishing sell-off, big rally, punishing sell-off, higher, no, it didn't make a higher high, it made a higher high right here. And that's what I was warning about, is some of these times higher highs like this, they get sold into and the stock gets crushed. Don't be a breakout buyer if the stock is already extended. Then we've seen this pattern of lower highs and lower lows. That has reversed. But where does it have the potential to go before it's likely to encounter a source of supply that might become resistance? Last year's anchor was support several times. Now, is it going to become resistance, or maybe it gets up through that and finds some supply up near this 200-day moving average? The 200-day moving average is declining, so I am not bullish on Applied Materials. I look at it and say, 1, it's a squirrely stock the way it trades. 2, it's expended a lot of energy getting from 170 to 192. It's just rallied 14% here in the last week. So I would say best left alone. How about CVS? Well, We already had Walgreens. So Walgreens was in a downtrend on the longer term time frame. I haven't looked at CVS, but I bet you that that weekly chart is going to look like garbage because the groups typically go together. And this is the weekly chart. It's still making a very clear pattern here of lower highs and lower lows. So if you're involved in CVS for a turnaround, again, remember, if they don't scare you out, they'll typically wear you out. And right now it's getting a bounce, and maybe it continues to bounce all the way up towards that 200-day moving average in here, or this prior band of support might offer resistance. So where does it have the potential to go before it's likely to encounter a source of supply, which might become resistance? That's the question. The question is not where's resistance. A lot of people say, hey, there's resistance at 56. We don't know that because if it goes to 56, it might go to 60, 62, 68, 70. We don't know. There's the potential for supply. Why is there potential for supply there? Because this prior support provides price memory. People who bought it there and then it broke down, they thought, hey, that was a false breakdown. And then they held it down here. They're going to be looking at this and going, hey, it's getting back to break even. Now I can get out of this stupid stock. It's just been tormenting me emotionally with the way it trades. Plus, it's below a declining 100-day, 150 and 200-day moving average. It's not likely to continue to move higher. So I would be very careful with this one and think that it's likely to do this and continue its downtrend at worst. Best case, maybe it starts to, goes down here and starts to do a bunch of this stuff and starts to turn sideways for the rest of this year. That's how long it can take for a nice base to form. And it wouldn't really be that, it would be more like this. And then maybe when it starts to break out over here, then you say, okay, now's the time to be a buyer. When we have the 20-week above the 31, above the 42-week moving average, and we have a pattern of higher highs and higher lows, we have just the opposite here, where it's below all those. So I look at these, I look at the semiconductor stocks that have been bouncing, and they're basically bouncing within ranges, maybe downtrends. And then you've got these two, what am I trying to say? Drugstores, and they're bouncing within downtrends. Let's look at the worst of the worst. So the worst stock right now is Edison Energy, and that's that's news driven. So you look at this, and if you're going to trade this, you got to say, well, what happened in previous fires? And I'm not going to do the history of that because it's not a stock I want to trade. But I would imagine this maybe was a fire over here, maybe this was a fire, and what's the subsequent trading afterwards for longer term investors? You're probably okay buying the dip in here. It only pays you 2.7%. So for a utility, it's really not much of an energy dividend player. So I would pay her. I would say you're best off leaving this one alone. Who knows what. Is the government going to step in and save this company? You have to have an electric company. Was it their fault the fire happened? I don't know. It doesn't show me on my chart. I would just leave this one completely alone. Moderna, this one is in just an awful downtrend. People get excited at the beginning of the year. I've seen them do it with this stock. But, again, we've got a declining 50-day moving average. Forget the 200. That's way up here. Moderna is in a horrific downtrend. That's the monthly chart. Look at the weekly time frame. It's in a horrific downtrend. Of course, rally attempts are going to be sold into, just like you see in CELH. CELH, and there was another one that I was talking about recently. So you get these bounces, but they're in downtrends. They're garbage stocks. That's just the way you have to look at them until they, if you're looking to trade a year-end bounce, then fine. The way you do that is on a shorter term time frame. As it makes this pattern of higher highs and higher lows, and then it breaks that pattern, you say enough's enough. I took my profit. Beautiful. Fine. No problem. What is TMDX? Is that the other one? Yeah, TMDX is another garbage name that people are trying to find the bottom in. And it just got a nice bounce. I mean, that was a great bounce. The beginning of the year, it gapped up. Then it made a pattern of higher highs and higher lows. And then what happened? Then it gapped down. You got to get out. You got to lock your gains in because now look at it. It's down that much for the year. That's where it closed last year at. Now it's down. What is that? 10, 12%. These stocks, just stay away from them. If you're going to trade them for a bounce, fine, trade them for a bounce. But understand They are guilty until proven innocent. And don't be surprised when these garbage stocks get a bounce and then they completely fall apart. That's the way they're supposed to trade. It's not something I made up. That's the way the markets work. Constellation brand, it's in a downtrend. News and surprises follow the direction of the trend. I don't know what happened here. All I know is, that's big money leaving the stock. 7 million shares versus the average of 2.6. That's big money. Big money pukes. Big money is not smart money. Why were they long this stock to begin with? It was in a clear pattern below a declining 20, 50, 200-day moving average of making lower highs and lower lows. News and surprises tends to follow the direction of the trend. It's a broken name. Has it dropped enough and now it's going to start to base? Maybe. But if you're buying it and expecting it to quickly return here, it can happen, but it's not most likely. As I've been saying a lot lately, we want to get involved in what's most probable, not what's possible. That's the difference between really professional trading and gambling. Sure, you might think, hey, it's a good stock, it's down a lot, whatever. That means absolutely nothing. So just look at it and say, it's a broken stock. Let that be other people's problem. PG and E, I believe they're another, they're gas and electric. So, Pacific, that means it's probably related to the fire. You can't really, if you're a news trader, then trade it on the news, but I'm not a news trader. I look at the stock and say it was in a beautiful uptrend. And when those uptrends break and you see that pattern of higher lows and higher highs break, if you're in it as a trend trade, you got to get out before the shit hits the fan, because it often does. So I would say if you own that one, I don't know what to tell you. It's probably too late to sell, but if they don't scare you out, they'll wear you out. Does this one at least pay a dividend that might be worth sticking around for? That's a good question. 0.2%. No, clearly not. And this is the one that I think has been really hit by the fires in the past. I don't know that for sure because, again, I'm not a news trader. I don't follow this stuff, but it's kind of interesting actually that, I haven't looked at this stock, but this is where this was the all-time high, and we can look at that and clearly go back and see that. So we put an anchor on the all-time high, and it tried to get above it briefly here. It couldn't close above that anchor, and then we finally closed above it, and it found buyers at that anchor. Now we're at it again. So maybe the worst is behind, and this is going to be support, or maybe we're going to see that this company goes out of business because their liabilities are too big. I don't know, but I certainly would just say leave it alone. As a utility, it pays 0.2% dividend. It's just not worth wasting your time and energy with. Las Vegas Sands. Since the beginning of the year, we had the stock below declining 20 and trapped below the 50-day moving average, which was flat. I would have looked at this and said, avoid it, at this point. I wouldn't have expected this to happen. And I would have thought, hey, we'll look at last year's anchor in the 200-day moving average as a potential level of support. Other people who, look at this stuff will say, hey, there's, on this day right here, they would say, hey, it's approaching support. Let me see, get my arrow. On this day, they might say it's approaching support at the 200-day moving average. I'm going to get involved. And they get involved right there at 46.71, which was on this day right here at 46.71. And for about an hour, they felt good about themselves. And then they woke up the next morning and just got punched in the gut. So it's guilty till proven innocent. Leave it alone. It was already showing signs of problems because it was below a declining 20 and 50-day moving average. So it shouldn't have been purchased. How about on semiconductor? Interesting, another semiconductor. This one is clearly in a downtrend. This is one of the worst semiconductor stocks out there. And you talk about the bigger the top, the bigger the drop. Here's something that, again, has shown a very clear pattern, lower highs and lower lows. And here we are again. Maybe we're in a similar situation as here and here, and we get a bounce and people get excited. Well, what's likely to happen when it comes up to these moving averages in this prior band of support? These people in here are going to say, hey, now I can get break even. Short sellers are going to say, hey, there's probably a lot of supply there, so let's put some more pressure on and short it. And then we see a pattern of lower highs and lower lows continue. And maybe it does this for a period of time, it all comes down to understanding market structure. And if it's still in a downtrend on the weekly time frame, you can trade it on shorter term time frames, but you're going to need that 200-day moving average to do something like this. So maybe the stock does this and crosses back and forth above and below that 200-day moving average, and then you get the 150-day, and you get the 50-day and the 100-day moving average. So they start to line up. Well, it would make sense to be a buyer over here and then set your stop underneath that level. It's no different than looking at the Qs where they were over here. So if we look at where the Qs, the NASDAQ 100 was after that decline, this is where the buyers regained control. So a lot of people wasted their time and energy in here trying to invest. Great trades for, bounce trades in there, but the bottom line was we were below these declining moving averages. We saw the moving averages crisscross. We saw the buyers regain control right here as the average dip buyer now became profitable, as the average short seller from late 2021 into 23, they were now in a losing position. So that means that's exactly where the buyers took control. So how does that relate back to what we were just talking about with ON Semiconductor? If we look at that weekly chart here, if they don't scare you out on the way down with this pattern of lower highs and lower lows, they will likely wear you out. So leave stocks like this alone. Sometimes they can reverse and do this, and that's great. Then get involved here. But again, are we looking at what's possible or what's most probable? That is what you want to ask yourself. Is it possible this stock is going to bounce? Of course, anything's possible in the market. If I had a nickel for every time I was surprised by something in the market, I would never have to trade in my life. Weird things happen all the time. That's why you have to manage risk. People who don't understand things say, well, Brian, you were bearish on the energy names. Now all of a sudden you're bullish because they're going up. Yeah, exactly. The buyers took control. Why would I be bearish? I had the potential to be bearish on the financials. I'm sorry, the energy names, because I thought maybe they were going to do this. Maybe they were going to get stopped, trapped below these moving averages. That was what seemed most reasonable. So I didn't short it because it was in a short-term uptrend on that 15-minute time frame, on that 30-minute time frame, on that 65-minute time frame. I'm not going to short while it's going up. That's just stupid. If I wanted to short it, I would have waited. So missed opportunity, meaning not being long, is better than sticking to, hey, I think this is going to drop, therefore I'm going to get short and fight the trend of the market. That's just, that's clearly dumb. Charles River Labs is down 11.43% this year. Is that a surprise? What was the trend going into this year? I see a very clear pattern here. Lower highs and lower lows. It shouldn't be a surprise that it makes another lower low. Now, maybe, we can always do the maybe game. Maybe this is just a quick undercut of that low on bigger volume. Maybe this is washout volume. And what could happen in here? Well, maybe we start to get a bounce. That's certainly possible. If you're a reversal trader, I'm not a reversal trader. I'm a trend trader. If you're a reversal trader, I would think this would be a time. It's undercut this low right here of $200.36. It made a low last week or the 160.85. This low is actually, what number was I looking at? The wrong one, clearly. The low was 160.165. Here we made a new low of 160.85. So a lot of times what we see is a quick undercut of the prior low. We had an inside day Friday. I mean, I wouldn't buy this stock, but some people who trade reversals look to buy this. It's still below a declining 5-day moving average. That's the orange line. I would just steer clear of this one. You got to figure out, are you a trend trader or are you a reversal trader? If you're a reversal trader, maybe this one is a candidate for you. As a trend trader who looks for trend alignment, well, then the trends are aligned here. They're both in downtrends. But I have to ask myself, does it mean it makes sense to short this? Not after it just dropped 30 points, 15% in the last week. I'm not going to short it down 15%. You needed to short it somewhere over here. Maybe after this gap up failed on, what was that day? Thursday. So we got back above the 2-day VWAP, and then we were trapped below the daily VWAP. So shorting on this day, and then you get a nice surprise the next morning if you held it overnight. And anyways, so Charles River Lab, leave it alone. Let the institutions battle it out down here and try to create support. Or again, if you're a reversal trader, then maybe that's your candidate. What's the direction of the 200-day moving average in Lamb Weston, LW? The direction of the 200-day moving average is declining. A lot of people got excited about it right here because it was above the 200. The direction of the 200 was declining. Those people who bought it as it closed above the 200-day moving average, look what happened to them. It's about the odds. The odds just aren't good. I remember, a couple of months ago, people were excited. Go back and look at your, if people haven't deleted them, about about the bonds back here, because it was above the 200-day moving average, and there was above the 50-day moving average. I was saying it's likely a trap. It's more likely that it's going to fail, and fail it has, because the direction of the 50, the direction of the 200-day moving average were still declining. So I'm trying to throw as much little educational nuggets in here as possible as we go along. So WBD. So this one is just it came into the new year in trouble. It broke down. It was holding the anchor from the beginning of the year. It came up to the 20-day moving average. It made that higher high. So listen, Brian, you always say buy the higher high above the flat to rising 5-day moving average. I do, but not on a gap right here. But maybe I would have bought it right here. And then I would have said, okay, my stop goes under here. As it pulls back and then fails to make a higher high, I would say, okay, well, now my stop is under here. So in other words, if I had purchased it, I would have purchased it here, and my stop would have gone here. And that means I would have purchased it at, 10.75, just let's call it, and $10.62. I would have lost 13 cents in the course of a day. And a lot of people feel stupid because they lose money on after owning it for 48 hours. But if you didn't sell it then, you definitely should have sold it here, not try to convince yourself and say, well, it found buyers at the anchor from the election last time, so I'm just going to hold it there. And then it slices right through it. And now you're down here saying, well, it's too late. Maybe I'll buy more. The next morning it gaps down. You're like, oh, well, that's got to be the worst. I'll buy a little bit more. And then you puke it all down here. It's not a big loss, but if you're, depends on how you position, trade it position wise. Right now, the chart is just a mess. I would say, look for the same stocks. Look for the ones that, are looking like AVGO is possibly getting ready to go again. Maybe we get a little pullback, higher low. It's been digesting this gap up from their last earnings report, and now we're holding above it. So AVGO is one definitely, worth looking at instead to the upside. Look at the ones in uptrends. What's, Upwork, UPWK. Where are we in the longer term on this one? If they didn't scare you out, and the people who were buying dips, all these little bounces, these were nice bounces. But if they didn't scare you out on the way down, they wore you out. Now we're in an uptrend. It's above the anchor from this peak, and it's right at the anchor from this peak. So maybe it's going to rally right up through here, then consolidate and continue moving higher. It's broken resistance. That resistance is so far holding a support. We're above all the rising moving averages. Here's a stock worth keeping an eye on. Earnings are due February 12th, so you got time in there. How's that look on a shorter term time frame? We're holding above the anchor from the election. We're back above the 20-day moving average. The 20-day moving average tomorrow will begin to rise because we get rid of this data right here and the close at that point, and we replace it, let's say, with data right here, meaning that 20-day moving average, which is just flattening out, is going to start to imperceivably start to rise here in the next couple of days if it does this. So then we'll have a rising 20-day moving average above a rising 50-day moving average. We had a shakeout with an advancing 50-day moving average. And this is the way we want to look at stocks for potential. You don't go shopping in the new low list. Look at Dollar General. How many people thought, oh, wow, it can't get any worse than that? Well, since then, it's just been a beautiful pattern of lower highs and lower lows. In fact, maybe it made a slight higher high there and suckered people in, and they got what they deserve for buying a stock with a declining 50 and 200-day moving average. And now below declining 5-day moving average. Look at the weekly chart on Dollar General. It's just a mess. It is garbage. Leave it alone. How long has it been in a decline? And how nasty has that decline been from 260 down to 68? It's like a sauna. A sauna had this huge run up and then a big breakdown. If they didn't scare you out in here, they wore you out. And now look at Asana. Now Asana was up on real big volume. It's consolidating on lighter volume on this weekly chart. We look at the daily time frame. Is it ready yet? Not quite yet. We're still below that declining 20-day moving average. When will that 20-day moving average begin to rise? Well, on Monday, we get rid of this data. Tuesday, this data. Wednesday, Thursday, Friday. So what we need to see is we need to get back above that 20-day moving average. And then that 20-day moving average would start to flatten out. And then I think you would want to see a pullback in here, create a higher low, and then be a buyer over here. Be a buyer over here with a stop under here, or half of your stop here, half of your stop there. It's not ready yet, but there's reason to be interested because the longer term, if they didn't scare you out, they wore you out. So that's, I'm bringing a couple other names into this, obviously. Hershey, what's the long-term trend here? Since this peak over here, it tried to turn sideways. And would you have bought in this breakout? I wouldn't, because it had a declining 200-day moving average. Would you have bought? Not bought in. Anyways, the point is, it's below all these declining moving averages. You can bullshit yourself and say, well, it's a blue chip company and it always comes back. And it does so far always come back in its history. But it doesn't mean that you might have to wait. It might, if they didn't scare you out in 05, 6, 7, well, then they wore you out in 8, 9, and 10. And then we had a big move above all the key moving averages. So the big rallies occur when we have proper structure. You might have bought it here when it made that higher high above all these moving averages and thought, wow, I'm chasing it. It was just 32. I can't believe I'm paying 38. But over here, when it finally broke those moving averages and made a lower low, you're selling at 93 if you're an investor. And these, these techniques work for every single time frame, whether it's a weekly time frame or a 1 minute time frame if you're a day trader. Let's see. So that looks like that was 10 of the best ones, 10 of the worst ones. Let's keep it interesting. That's all I'm going to look at from that list. What I want to do, though, is take a look at what everyone's favorite congresswoman is up to. We just saw that her periodic transaction report came out, and we'll just go down each one of these. So on January 14th, she purchased, her husband, because he manages the money, he purchased 50 call options with a strike price of 150. So he's deep in the money. Did the wrong thing. So he buys deep in the money. Okay. So he bought the 150s. Is that because, he thinks that's good support because prior resistance became support here? Here's the weekly chart. So we're clearly in an uptrend. We're above all the key moving averages. January 14th. So this, I've been looking at Google because it's kind of, it's a little choppy in here, but it's holding the rising 20-day moving average. It's above the year-to-date anchor. It's above the 50. So this goes out to January 16 of 26. And he's in the money. I mean, it's good. If it was me, I would never hold it if it dropped probably below this low, but he's an investor. The trend is your friend. It's in an uptrend. It looks like a good purchase to me. Amazon is also in a beautiful uptrend. He's not early on this trend, on this trade. I mean, it's had this massive trade, right? And look at this. It had this big move and it broke out. And what happened on the breakout? It got sold into. Now we've got a new pattern of higher highs and higher lows. So here's another one. He bought 50 call options with a strike price of 150 on this one also. So he paid a lot of money for these. These are deep in the money. The trend's your friend. He's selling Apple. If you look at the daily chart, Apple's been in trouble here, so sold part of his position, partial position. Nvidia sold partial position, so taking some profits after big rallies. This is smart trading. This is, it's not probably that he thinks that Nvidia has a problem. He exercised 500. So here's what happened: is he exercised 500 call options for 50,000 shares, and then with a strike price of 12. It expired 12/20. So he did that, and then he sold 10,000 of those shares. So 10,000 shares, and then sold purchased some stock too. That's interesting, on January 14th. So that's interesting that he sold 10,000 shares but then bought more. So I'm not sure what that is about. But also PANW. Remember this one? I do. He bought the calls right here on this day. And he bought the, let's see, I'm sure it says here, purchased on February 21st, 140 call options with a strike price of 100. So again, well in the money, and took had a massive move. So those calls, let's say, the stock went from 135 up to 170. 30, he probably didn't make a lot of money, truthfully, because he paid a lot of probably didn't pay actually too much premium because they were so deep in the money. And that's part of his strategy, it appears, is he's buying deep in the money so he doesn't have to pay as much time value to get the same type of move. TEM, everyone's talking about this one. I saw someone tweet earlier that this is up 15% right now on Robinhood. Here's what I would tell you about TEM. Looks like they bought 50 call options with a strike price of 20. So again, deep in the money. Like, the stock has never traded at 20. Expires January 16th of 26. And this one looks to me like, don't chase it. It's got the anchor from the IPO is that black line right here. It's got the anchor from the election right here. It's got the declining 50-day moving average overhead. It doesn't have a 200-day moving average yet. Let's see, 200 days ago was when? April. So TEM came public in June, so it won't have a 200-day moving average for about 3 months, it looks like. So, if it gaps up into here, I would think that it's likely to what? Well, prior resistance here became support, likely to become resistance again. It's likely to be a source of supply where enough supply that might become resistance. So I would say be very careful about chasing this one. It's up 15%. That means 3.5 times 1.5 it's up about $5, putting it at close to 40. Maybe you can get a move up to 43, 44. And then I would expect, it's going to need to do some work in this area to absorb some supply that's likely to be released. So I just wouldn't chase it, definitely. But it's one to definitely put on your radar, because if they think something's going on there, then there probably is. VST, we already spoke about. They purchased call options in here on January 14th also. So prior resistance holding a support. It's not a new uptrend, but it's an established uptrend. And you could argue that it's extended, and I agree with you, but the pattern is still very clear. I think the timing of this purchase wasn't probably their best purchase, simply because when you look at prior rallies, we're kind of getting to the point where prior rallies have, started to pull back from. So I wouldn't be in a hurry. I think this one's going to probably take a little bit more time before it gets going. So anyways, that is, I said maybe I would talk about Bitcoin. So let's do that. As I told Alpha Trend subscribers, I sold my recent add-on. I purchased on that prior pullback in Bitcoin at 98 and change, and just sold at 103 today. I still have a core 50% position in there. So it's not that, it's kind of like Pelosi selling part of their position. That's all it is. I'm trading around a core position. Let me see if I can stop the share and then present share screen. Let's get this on here. So hopefully you're seeing the trading view. And on here on the left is the daily, that's should be the daily. Here's the daily chart of Bitcoin. And Bitcoin, as I mentioned, I was looking at it, purchasing it on a pullback down to this anchor. I didn't get it. Instead, the stock rallied up. It held those gains. I bought over here at 98 and change, right in here. That's what it was. So I drawn this in saying if it pulls back to these anchors, I'm going to be a buyer. So I bought in here at 98 and change. I sold at 103 today. That was my add-on position. I'm still holding a 50%. I also told subscribers that I bought some Ethereum yesterday and I sold half of that. And if it breaks below probably 31.20 or so, I'm most likely going to get out of that. The one everyone's talking about is Trump. The Trump coin. So let's take a look at this actually on a 15-minute time frame, because initially, we had some good structure there. It rallied out of the gate, came to the anchor from the beginning, and we saw that there were buyers there. That's not what I meant to do. Let me just get rid of that. There were buyers there once, twice. We had an undercut. Buyers regained control, higher low, and then we broke this peak, and then another rally began. So we do an anchor handoff from there. It pulled back perfectly to that. First bounce usually works. Second bounce typically sometimes does, but usually makes a lower high if it does. And then we came down to this anchor. We cut a little bit through it. Then we found true support there. Buyers rallied and took control. Now it's below all these anchors. What does that mean? It means the average person who's purchased this is now losing pretty good. The average price that this coin is traded at is 46. Right now it's at 34. Longer term, I don't understand it. I don't know if people understand what a meme coin is. It means it has zero utility. It's just a made up thing to bet on. That's all it is. And I won't go into I don't have any politics about it, but I look at it and I say, here's the anchor from the most recent relevant lower high. So we anchor that. We could also do the same thing here, is do a handoff from this level and say, are rallies up to that level going to be, encounter supply? Right now, we have a very clear pattern in here, and that pattern, you don't need any anchors to see it. We made this high. We made a lower low. We had made this low. We made a lower high. Then we made a lower low right in here. We made a lower high. We made a lower low, a lower high, a lower low. If people are buying this, you're seeing something different than me as a trend trader. Maybe this is going to be the higher low, but if it rallies, be careful, take some profits, trade this thing. You could say, if you think this is a low, set an anchor right there and see how it behaves in this area. And that anchor does not look right. Let me see what's going on here. That looks like it's anchoring to the high, which I don't want. I want open, high, low, close. So how do I do that in here? I always forget because this isn't my main trading platform. Anyways, I would suspect that setting is not correct somehow. Let's set one here and, okay, inputs, standard. Oh, that's style. Yeah, I don't know how to do it. So it should be open, high, low, close, but I don't know if that is. I'm not going to waste your time with that. Anyways, I said that I would be looking at Bitcoin, and really the way I see Bitcoin right now, let's make that back to a daily on the left. And it's holding the anchor from the high. So that's good. Now and here's what I typically do, especially after a shakeout. So what happened here is we shook the sellers out, and then it rallied quickly right up to a new high. I don't know why I didn't do this. I was asleep at the wheel. I almost always sell some on the breakout right there because they typically come back in like this. Look at this breakout. Look at this breakout. A couple days later, look at this breakout. They might rally a couple days or so, but you're generally better off selling partial into the breakout and trying to reestablish your position at a lower piece, unless you're just a hodler, and that's fine, because longer term, that's what's worked in here. Anyways, I don't see a way to get questions on here. So I'm just going to end this here. I hope this was useful. It went a little bit longer than I had anticipated. So let me know on Twitter what you thought, if it was useful, if you'd like to see something like this again. And I'll give you a final, just a quick pitch to say, I do this kind of stuff all the time for subscribers on Twitter, and it's just $10 a month. If you found this useful and you're serious about your education in the market, $10 a month is nothing. Have a good night, everybody, and I'll talk to you whenever. Thanks.